ꯀꯥꯏꯗꯒꯤꯅꯤ ꯑꯩ ꯑꯍꯥꯟꯕꯗ ꯐꯛ ꯑꯣꯏꯅ ꯁꯥꯖꯔꯝꯃꯤ ꯇ꯭ꯔꯦꯅꯤꯡ ꯆꯠꯂ ꯃꯇꯨꯡꯗꯒꯤꯗꯤ ꯑꯩ ꯄ꯭ꯔꯗꯛꯁ ꯀꯧꯅꯥꯁꯦ ꯃꯈꯟ ꯃꯈꯟ ꯁꯥꯕ ꯕꯦꯛ ꯁꯥꯔꯦ ꯕꯇꯟ ꯁꯥꯔꯦ ꯐꯥꯏꯟ ꯀꯣꯚꯔꯁꯦ ꯑꯩꯅ ꯁꯥꯕꯗꯒꯤꯗꯤ ꯑꯣꯔꯗꯔ ꯃꯤꯅ ꯃꯊꯪ ꯃꯊꯪ ꯇꯧꯕꯤꯔꯛꯑꯦ.
Before I attend that training, I didn't maintain records.
Welcome back. We are here with the first of the Inclusive Finance India Summit. Thanks for being patient with us. We have a little bit of time spillover, but we'll still have compensate for it as we have a little bit of leeway afterwards. So I have the pleasure of welcoming the first plenary session speakers. The session will be moderated by Naina Lal Kirwai, who's former chairman of HSBC India. The speakers, Somakanti Ghosh, Group Chief Economic Advisor, State Bank of India. Mr. V. Bedyanathan, MD and CEO, IDFC First Bank. Mr. Michael Vegan, Director of Financial Services for the Poor, the Bill and Melinda Gates Foundation. Dr. Arvind Mairam, Principal Economic Advisor for the Government of Rajasthan. And Dr. Shamika Ravi, Director of Research for Brookings India. Welcome to the session, Deciphering Policy Response to COVID, Improving Preparedness for Future Crisis. And without taking any further time, I hand over the charge of this session to the moderator. Naina, please take over from here. Thank you.
Thank you, Radhika, and big congratulations to Access and the organizers for putting together this important event. It's a very important one in everyone's calendar every year, and you take this forward with great aplomb. So well done on that. I have an illustrious panel here before you, as you've seen, and without much ado, I'd like to launch into what is going to be a very important session as we look at deciphering the policy responses, but more critically, improving the preparedness for future crises. And in terms of just opening this session, I thought I would just share with you how important it is to have the institutions and the ecosystem in place. You heard a little bit about this from Mr. Chintala of NABARD, from Amitabh Kant in the earlier session, because without that ecosystem in place, we might not have been able to even achieve what we did through the crisis. So whether it was the JAM Trinity, which enabled the DBTs, the fact that we had the possibility of doing the direct benefit transfers in a cashless, contactless way through the COVID crisis, we would have not had the administrative machinery to execute on some of the promise made to help those that were hurt substantially by the COVID crisis. So getting this ecosystem right, improving it, learning from what worked and what didn't is going to continue to be critical in terms of the future. And I hope that the panelists will touch on some of this. The second is, of course, that any movement towards the market has to be accompanied by a protective framework for the weaker links. So we need those that, whether it's the farmers, the small enterprises, the workers, those that could get left behind, to be covered appropriately in these initiatives. So who are these sections that maybe needed more effort on our part? And then a third on execution is sometimes in our desire to achieve saturation levels at an accelerated pace, we actually do ourselves more harm than good. So pacing initiatives which help, so whether it was the preventing dormant accounts or preventing the stock of unused debit cards, these are all areas which require to be administered in a way that the initiative itself is paced for success and not set up for failure. So we continue to have stresses in the system. As Sam is a worry, as Kamal highlighted in his presentation earlier, with the loans there, 20% looking bad, fear of loan waivers, all of this are really challenges we have seen before. It has brought down the system before, and they come up and crop up in ways as we are seeing right now. So we want to make sure that every crisis is an opportunity for us to learn and take things forward. So let me now just start with asking our panel to kick off. And I will direct questions at you one by one. Feel free to jump in where you want and need to. And the first of my questions I would like to direct to Soumya Kanti. So what are some of the things that worked well for us? Transfer of DBTs, the NREGA wage payments, access through digital payments, BC networks. Your comments on that?
Sorry. Good morning, everyone, and it's a pleasure to be over here. I think it's a great opportunity to discuss the measures and the way the India has shaped up in the pandemic. I think just on a lighter note, I think I was reading an article just a couple of days back, I think a fortnight back, which the heading actually went on that how the COVID actually whipsawed the economy. So basically, everybody was taken aback. There was all across the globe, we saw that earlier the recovery was supposed to be elongated. Then everyone changed their view. The recovery was faster, and India was no exception. And we are glad that actually the recovery has been much faster than what we had anticipated earlier. And hopefully that will remain the cause in the next couple of months or so. Now, having said that, I think there were a lot of things which happened during the crisis. And some of the most important things which happened, I think I need to talk about the DBT. I mean, in terms of the sheer numbers, as you all know that they were actually total amount of, if you look at the Jan Dhan accounts, so the government decided in the beginning that it will transfer all the accounts to the Jan Dhan accounts. And if I just look at the sheer numbers, the total number of Jan Dhan accounts which was opened during the months of March to December, the account was around 3.5 crore accounts. And the total amount in these accounts, average balances in these accounts actually increased by 16,058 crore to 1.35 lakh crores at the end of December 2020. So there was, and all these actually were using this contactless DBT platform, the NPCI infrastructure, the massive number of transactions which went in during this period actually served this pandemic quite well. So that's the point number one. The point number two is actually in terms of the COVID, even if you look into the digital transaction which happened, and that was a consequence of the significant digital infrastructure which the banks have actually put in assiduously in the last 3 to 4 years. I think if you just look into the numbers, the increase in the digital transaction was phenomenal. If you look into for example, the UPI transaction, that increased 2.5 times in terms of value and 2.1 times in terms of volume during April to October 20. The mobile wallets increased by 1.5 times in value and 1.9 times in volume during April to October 2020. That actually indicates that even smaller transactions were done on digital platform. And in 2020-21, as we speak, the government has transferred around 2.94 lakh crores through DBT platform, of which 50,000 crore were through NREGA transaction. So as you can understand that a lot of these things were done to the digital infrastructure. However, there are some points I would like to highlight over here, I think, which also the banks had to work out because of the massive strain during the COVID. One of them, as all of you know, that the banks work with the business correspondent model. And that actually came to a lot of stress in the initial part of the crisis because there was a lot of migrant movements, cash withdrawals witnessed significant surge. So actually all the banks took a lot of steps to help the banking correspondent outlets by helping them, providing them financial support, providing them financial support for meeting the cost over insurance cover, and regularly educating themselves on precautionary guidelines. And the final point, I think, which I can talk about later is that even as all the channels work, the digital transactions of all the banks right now has actually witnessed a significant increase in transaction, including, for example, banks like us. And the important point is that a lot of transactions which were hitherto not working on the digital transaction, for example, like the agriculture sector, which has been traditionally being more conservative, there actually a significant amount of transaction is now going through that, the digital platform also. We have a Neono platform. So I think this augurs well. But important point is that we need to keep pace of this digital transaction in the future, because as you do more digital transactions and the footfall of the branches fall, that will also allow the banks to pass on the benefit of cost reduction to the customers, which I think is an important point today, because at the end of the day, I think that's one way of looking into how you can actually maintain an interest rate regime which is low, stable, and doesn't change too much, because given the vagaries of the financial stability and instability.
So thank you for that, Soumyakant. You've really, I think, given a pretty strong endorsement of the fact that we fortunately had a certain amount of the infrastructure in place which enabled all this, and the report card looks pretty good. Let me ask Shamika, do you agree with this, Shamika? Where do you come out on the inclusive finance infrastructure and the extent the country was prepared to deal with an unprecedented crisis such as this?
Thank you, Nana, for that question. We have to read the current situation, or let's say the last 8 months, also from disaggregated different data points suggesting different aspects of the problem and the implications. So for instance, if you just look at Google mobility data across India, you see there are huge variations. Some states bounced back to pre-COVID relatively faster in terms of mobility than other states. Now, it's important to realize that there are certain parts of the country, for instance, the Northeast, where despite the infection rate being low, which is not just an outcome of testing, but the infection rate indeed was low because it took some time for it to spread in these parts. And yet, economic activities declined very drastically. In fact, some of the biggest decline in economic activities were in the Northeast. So there is something broken in terms of communicating, building trust. Fear in this pandemic became as big a factor as the infection itself, I think. So that is about communicating and trying to bring back economic activities across different segments of the market. But we know that if you look at the JAM trinity, just looking at Jan Dhan, Aadhaar and mobile, all three of them, and look at how strong is this platform indeed across different states of the country, again, there are very big variations. For instance, Assam and Meghalaya have relatively much lower coverage of Aadhaar itself, not just Jan Dhan and mobile. Another aspect of this is, while of course the bank account and Aadhaar are on the back of government initiative, and after the pandemic, in some sense, that last mile connectivity was very quickly plugged. But mobile was almost entirely on the back of private sector and sort of private enterprise. So it's important to realize that it has really taken a mix of government initiatives as well as corporate functioning to really make a lot of these transfers and make a lot of these last mile interventions possible. So again, we have to give credit where it's due. In fact, across the country, the median for JAM is above 90%, barring Assam and Meghalaya, which means more than 90% of households in every state have Jan Dhan or some bank account, Aadhaar and mobile connectivity, which means that the platform indeed is or was strong for the government to then jump in and carry out several aspects of the DBT. Now, we know from the spending aspect, what Soumyakant just pointed out, and we know from the government data what is the nature of the dispersal. But I think equally reassuring when you look at the demand side of it, meaning how much did people actually receive? And here, the NCAER surveys that were conducted, telephone surveys, and they've had 3 rounds of it, are quite reassuring when we know that more than 85% of households, as early as April and May, had in fact received some kind of support, either in the form of cash support or food. But this is a very high percentage, for a country like ours. And that has only subsequently increased over time. But the pandemic itself, or the disruptions, had very different impacts on the private sector and the government sector employees. For instance, we know that almost 90% government had to enroll in the salary, whereas we know that nearly 1/3 of private sector employees actually received no salaries in the first 2 months. Yeah. So these are now salary regular employees. So we have to sort of appreciate those distinctions. But the hardest hit, other than the laborers, were the small businesses, Nana.
Yeah. Also, we're having a little problem with your audio, but I think the comments you make are very valid in terms of ensuring even distribution across the country. And I think disaggregating data would be important, particularly from people like yourselves as you analyze this going forward to help preparedness next time. Let me turn to Arvind Mayaram. Arvind, you've been an architect of some of these policies when they were implemented, and it must give you a lot of satisfaction to know that that hard work has all paid off. But let me ask you, in terms of some of the issues, in terms of inactive saving accounts, which led to exclusion of beneficiaries, lack of insurance coverage of families that might have led to the trap of poverty, what are the investments required to improve this financial capability building and the financial literacy of low-income households? You, as an administrator, have an eagle eye, I'm sure, for these details in terms of the improvements therein. You're on mute, Arvind. Yeah.
Thank you very much, Nana. I would like to first say that in the past couple of years, there has been a huge amount of discourse on how technology itself, in itself, has made all the difference. And when we feel at this point of time that but for this, say, Jan Dhan accounts or the last mile connectivity, etc., we would not have been able to deal with the situation. I think we are pretty far off the fact. In the last, if you remember from 1942, when about 10 million people died in that Bengal famine, post 1960s, India had been struggling very seriously with famines and droughts on a very recurring basis all across the country. But so we have had a very robust system of providing relief. Earlier it was food for work, then of course MG Narega came in, and the people have been, so there have been no, at least no recorded death from starvation even during the worst periods of famine in the country. Even water famines have taken place. So India has for a long period of time been prepared and institutionally strong in dealing with this kind of crisis which strikes on a recurring basis. Of course, this is of a very different nature. And also, I think, because of the kind of response we had, like a sudden 4-hour notice lockdown also had a very far-reaching and adverse impact, I would say, on many things. Many of the things that we are seeing in terms of the migrant labor and things like that have really been hit because nobody really thought of this. We depended too much on technology. And I think we don't realize technology is a means towards an end. It cannot be seen as an end in itself. When you look at even Jan Dhan accounts and certain figures were given, you must remember that even in March of this year, March or April, as Shamika has also pointed out, a lot of money had gone into these accounts. It is also on account of the fact that the Rabi crop comes out at that point of time, and a lot of labor is involved in the agriculture agriculture sector, and they also get paid and some money flows in from there. So it is not necessarily how the government is responding to these, but it is how the people have been able to look at it. The money that has gone into these accounts actually is 500 rupees a month in women's accounts. Now you can imagine if you have a lockdown situation, there are no jobs, how far 500 rupees can take a family in a month? Apart from the food that was being given, but that food has been given, that right to food was enacted much earlier and was supposed to be in place to provide that food. So I think what we need to look at is in a more comprehensive manner. No, we should not simply look at the technology part of it. We should be looking at how comprehensively the policies which have been built over a long period of time have sustained us through crises in the past and have sustained us through crisis in this period. Obviously, as we become more and more modern, as technology comes in, our efficiency increases. So I will not deny the fact that we have been much more efficient because technology was available to us. But I also believe that it is not necessary that everybody who needed to get this facility got this facility. the accounts have been dormant also. There are World Bank studies and others where they've said that close to 20% of our Jan Dhan accounts have been dormant, which is the highest amongst the developing countries. I mean, mostly averaging about 8%, 9% dormancy exists in these small, accounts at the lower level of economic strata. But in India, it is about 20%. So there is something which is missing out in our great hurry to say that because of technology, we have arrived. And a lot more needs to be looked at from that perspective.
Yeah. Arvind, I think your insights are invaluable as ever. And, you talk about dormant accounts. As an erstwhile banker, I can tell you dormant accounts are very frightening in a compliance system. So let me turn to Vedya to make sure that we get the actual reality on the ground and inputs from you. So these kind of pressures that a crisis puts on financial institutions are really not easy for banks to respond to. And you are, of course, a very important cog in that response system. So let's hear from you in terms of how those pressures, organizations such as yours, and what your comments are on the policies that we need to look at going forward.
So good morning, Naina, and everybody else in the panel. It's very true that financial services is a very important cog when you deal with a crisis of this magnitude. Because end of the day, you can create budgets, you can create the availability of money, you can have the resources, but unless those resources reach the last mile, this is of no use. So the important thing that that the financial services system did at this point of time was to actually pipe that money to the last mile. Now, how did the system reach the money to the last mile? We talked of, Mr. Maram talked about 500 rupees to the last mile. Now, how did it reach? It reached not because what the system did today. I really believe the act of doing the rapid amount of digitization effort the government has been doing, the RBI has been doing it right from demonetization time of 2016, or probably even before, but certainly after 2016, the amount of institutional framework for creating digitization in the country has been phenomenal. To give you one idea, the customers who are repaying us through digital transactions after returning their checks or or instruments unpaid has actually grown from like 8,000 pre-demonetization to 3 lakhs per month today, which means that's the order of magnitude people are paying through digital channels. I mean, they return the check, but subsequently pay through any digital channel. That's so. What I'm trying to say is that platform India created, which is basically you can call it the Jan Dhan, you can call it the UPI, you can call it the various initiatives we talked about, Jan Dhan, Trinity, and all that. So the short point is that the creation of that architecture pre-crisis was the critical item. Not that anybody knew crisis is coming, but I can say that if this institution had not been created, we would have been caught as a nation. We would have been caught very, very flat-footed. There may have been crises in the past, like Mr. Mairam very correctly pointed out, that there was a food crisis and so on and so forth, but never a crisis of this magnitude that the whole supply chain will stop overnight for 40 days. It never happened. So it would have been very flat-footed, and therefore this is a huge success of the creation of the preparation that happened prior to the crisis. That's one. Now, in terms of the impact on the system, I just have one thing to say, that that the system got stress tested. It's very key, because obviously if you choke the system up for 40 days and nobody has money, it would have really knocked a lot of people off. So the RBI got stress tested. They came out with scheme after scheme after scheme in rapid succession: TLTRO1, TLTRO2, MSF increase, CRR reduction. I mean, it was like a rapid fire. Government of India moved with so many schemes, we know all of them. The banking system moved with great agility. Branches were open. In fact, all branches were open during that period of time for truncated hours, but they were open. Money was flowing, so banks got stress tested. Never before the Indian banking system had done restructuring of the portfolio at such a scale of retail customers. Never before had the banking system done moratorium ever in a banking system of 70 years. This time they gave moratorium of 6 months for customers at a stretch. There were a lot of academic conversations, the culture will get spoiled and all this. That didn't happen. The point I was saying that every part of the system got stress tested, and I think it's a very important to take away from the COVID situation.
Yeah. So you sound quite positive in terms of the ability of institutions, the financial institutions, to be able to respond to a crisis of this nature going forward, and that we pass the stress testing, if not with flying colors, but at least with a very robust response in terms of meeting needs. And yeah, so let me turn to Michael. Michael, you come at it from a bit of a global perspective as well. We'd love to hear from you as to what are these lessons as you look at India versus maybe other countries. Lessons here that other countries can learn from, and of course, lessons that we in India can learn from other countries.
Yes, absolutely. Virtually every country launched social protection payments in response to the economic crisis by the pandemic. They reached a total of 2.2 billion recipients globally, and more than half of them are new social payment recipients. So it was a really major scaling effort. And some countries like India did well. They had deep financial inclusion to begin with, but also brought many new people into the accounts. The World Bank looked at 60 countries, and of those 33 were able to start making these social protection payments by June of last year. Conversely, of those that had either ID or financial inclusion rates below 40%, only 4 of the 27 countries in those categories were able to make it. So countries that had the right basis in place, like India does with the Jan Dhan accounts and Aadhaar and UPI and so forth, were able to move very quickly. Other countries are still struggling to identify the new recipients of social protection payments and actually make those. A lot that can be learned.
So, very positive inputs from everyone. I mean, just hearing what is a pretty good report card for India in terms of the ability and the ecosystem that had been set up responding to a crisis such as this. So thank God for that. Let me now turn to you, Soumya, to ask you about issues for the SME and the MSME sector. And I'll ask Arvind to come in right after this as well on this subject of two things. One is the redefinition of MSMEs. There is a fear that this will crowd out the small boys, the very ones we need to help right now, because the focus therein begins to shift to a much larger universe. Is that concern well-founded? And also, in terms of micro and informal enterprises, have we done enough? Because we still hear of pain from there, whether it is the availability of credit or indeed just the economic shutdown for them. So, Soumya, over to you, and then Arvind to step in on this theme.
Yeah, thank you, Nana. I think I'll just raise very quickly a point which Arvind raised in the earlier in terms of the dormant accounts. Let me just specify that, yes, the dormant account was a problem in the past, but as we see in our bank today also, I think the number of dormant accounts is significantly reduced. I think it's probably less than 10% or even 5%. And the average balances in the accounts have been is now around rupees 3,200. And these accounts are primarily used for remittances. And there are also other social reasons why this PMJDY has been a successful. But having said that, I think let me now come to the MSME sector. Yes, the MSME sector has been in some sort of a stress. I think there has been also a lot of structural changes which has happened in the economy. We had the GST implementation in 2017. We also have other implementations. So there has been, and also there has been, as you know, the financial sector has gone through some sort of an instability. For example, the ILFS one, the other things which has happened, that there has been some global contagion. So there has been some problems in the financial sector also. So all these has had an adverse impact on the MSME sector. But I think, again, over here, if you actually look into what, and I am not denying that the MSMEs are not in a stress. Yes, they're in a stress. But if you actually look into some of the numbers, if we just say over here, I think the strategy of the banks has been, and it was also a strategy earlier, has been to closely align with the whatever has been the Atmanirbhar Bharat objective of more with SME and MSME and agriculture. I will give you some numbers. Actually, the top 23 private, as of now, the top 23 private sector banks and 31 NBFCs has disbursed 1.58 lakh crores to 40 lakh borrowers as on December 40. And if I talk about the emergency credit guarantee scheme, which is largely led by the public sector banks, the total amount which has been given to all this MSME is 2 lakh crores, and the total amount to around 80 lakh borrowers. And the partial guarantee scheme from the NBFC public sector banks has also actually given 28,000 crore. And so all these numbers shows that there has been a significant amount of the effort on the part of the banks and the government to actually help the MSME sector. There are also the banks. There are also banks which actually, most of the banks have also tried to reorganize their strategy because of the crisis. For example, in our bank, we have launched the SME revamp. We have enhanced the working capital norms for the SME sector. Branches which have significant SME has been identified by the circles. And according to surplus manpower is now shifting to the operations so that we can actually focus more on the MSME sector, which has always been the case with the Indian banks, but more in a focused manner. And finally, another thing which I want to mention over here, which maybe which are little related to the SME sector, is also the focus on the rural sector. As all of you know that, we can, if we have time, we can discuss this later. There has been a lot of discussion about the rural sector in terms of the agricultural and micro markets. But as you know over here, that the agricultural portfolio of the banks sometimes looks a little stressed because a large part of which is in the forms of the KYC portfolio. So there is an urgent reason for that to reform also, so that the loans actually reach the small and marginal farmers. So in these directions also, the banks have been working very hard. So in my sense, if I want to conclude, yes, there have been stress points. Yes, the MSME sector has been going through some sort of stress, but I think some of the guaranteed scheme which the government has launched, also the initiatives some of the banks have been taking, all the banks taken together, including the private, public, NBFCs, I think that has been all to help them to come out of this stress. We may take time, but I think if I look into the numbers, especially the emergency credit guarantee scheme, that has been a very good success across the entire part of India.
So again, we are learning as we go. There have been some successes, but I do believe we've still a lot to do when it comes to the micro enterprise, SME, MSME spaces. So let's look at what some of those recommendations might look like. Arvind, over to you, and Vaidya, I'll ask you to come in right after Arvind with your comments on this sector as well.
So as far as banking is concerned, as Soumya just mentioned, I think there was entire Atmanirbhar Bharat actually is basically driven by the bank loans, which were in different ways, guarantees and non-guaranteed, and liquidity, infusion, and so on. But I think there is a problem. If you look at even the numbers that the industries have put out, it appears that the large industries have benefited on account by hitting the smaller industries in terms of the market pickup of their production or their demand for their goods and production, etc. What we have seen, at least I can say in Rajasthan, we have seen is that the MSMEs have been very badly hit on account of the demand destruction side. They didn't have deep pockets to be able to maintain their workforce or maintain their production, even at minimum level. So a very large number of the MSMEs have actually shut down, and they have not been able to come back on stream. There is also a report by your erstwhile bank HSBC on this, where it says inequality has drastically increased on account of the pandemic and the measures that have been taken. There wasn't enough done to help the MSMEs to be able to survive. And therefore, I am not very sanguine about the fact that the Atmanirbhar Bharat actually worked for the MSMEs. This has really not been the kind of help or assistance they should have been given. and a much more robust and nuanced package, if it was provided to the MSMEs, their survival would have been much better. I'm very sure that there's a lot of loans which have been given out by the banks, but I am really not very sure as to how many of these have actually gone to the real MSME sector, which was surviving at the margins in any case, even before the pandemic, and which now has either shut down or is virtually on the verge of shutdown. So I would have a contrarian view on this. I think we have failed the MSMEs during the pandemic in the manner in which we should have supported them.
Yeah. So, Arvind, you raise an important issue, not just because that sector itself shuts down or is in pain and distress, but because every one of them employs others who therefore lose jobs and don't have the opportunity to survive.
60% of employment in the industrial sector or manufacturing is in, or in the organized sector, I would say, is in MSMEs. Yeah. So the numbers are much larger in terms of employment in those.
Yeah. And, I was reading a report which talks about what is a K-shaped recovery for a country such as ours, which is worrying because the lower leg of the K is about those that fall out of the system. So you get the uptick, which is normally called the V, but the bottom is just that about the increased poverty that comes from some of the stresses that you have described. So I'm going to turn to you, Vaidya. You're right there on the ground. And one of the worries I have had, and I was looking at a report on women entrepreneurs, micro-entrepreneurs too, who were first-time borrowers, and banks, and hopefully not just that this does not apply to you, but banks look to credit history. And for someone who has not borrowed when they were doing well because they were debt averse, coming to borrow at a time when under stress is then told, well, we don't have a credit history to go on in order to give you a loan. And as a result, many women actually found this as a huge issue because they were debt averse initially, good thing. But when they needed the funding, they didn't have the credit history of having been a borrower in the first place. So have you faced these issues, and how do you see the SME, MSME areas being able to come out of the hole they're in?
It's a great question and a very, very important subject. Now, to Mr. Mayaram's point about the fact that SMEs were in pain and they saw demand destruction and the cash flow got affected. Of course, it's very, very true. We all know that. We're seeing it at the bottom of the pyramid all the time. As a bank, we lend to maybe close to about 7 or 8 million of these people, and that's acquired just in the last maybe few years, maybe 7 or 8 years. So we deal with them like we lend to millions of them every year. So we are right in the thick of the ecosystem. So I can talk about that. Now, to this comment of Mr. Mayaram and to everybody else, now this is not today's issue that SMEs are stressed. It's a 70-year-old issue. Since 70 years after independence, SMEs never got money. The small entrepreneurs got not money. Consumers never got money. And when I say never got money, you think about it, even today, 50%, 50 lakh crores out of our 100 lakh crores of our banking system money is to people who have borrowed 50 crores or above. Think about it, 50 crores or above is 50%, 50 lakh crores, and that tells a story. But, so this is a historical issue, not a today's issue. But what is important is, at least in the last 5 years, India as a nation, all of us should know, has covered massive ground on this front. The amount of now data available through GST, through telecom information, through people call records, and that ability to be able to scrape the customer's transaction record, etc., and to even scrape customer bank behavior, and from there to lend to customers. And we do that all the time as a cash flow lending, not a security lending. And by the way, cash flow lending to even small entrepreneurs, giving 20,000 rupee loans, 10,000 rupee loans, giving money for sanitation. We finance toilets. We finance 1,56,000 toilets for 20,000, 10,000 rupees each. And they're performing fantastic. We finance close to about 2 lakh goats, cows, and buffaloes, and they're performing fantastic. So the point I'm trying to make is that this is a historical issue. Last 5 or 8 years, this has been dramatically fixed. Today, if you see one area that is growing, it is still the consumer, it is still the small entrepreneur, it is still the MSME. Corporate growth has been flat for 4 years, but the consumer and the MSME has grown. So it's a historical issue, the 70-year-old issue. At least last 5 years, it's got fixed to a very good extent. Now, lastly, on the women entrepreneur thing and not having credit track record thing, I would definitely think that the ecosystem of being able to finance these people for small purposes, like to put up a kirana shop, to buy a cow, goat, buffalo, etc., that leads to enterprise development, micro enterprise development, so to say. And MFI industry alone has put out close to 2 lakh crores. This number is not even 40,000 crores 5 years ago. So let me just say that it has been, I'm saying this for the entire ecosystem, just to set the record right, that in the last 5-7 years, this is being fixed, in my opinion, very firmly. I'm experiencing it. I'm not just talking academically.
It's again people like you who understand this and are so much a practitioner on the ground, whose thoughts and inputs become critical going forward. And in terms of India's digital journey and the financial institutions in particular, the digital journey therein, I'm going to ask you, Michael, on your thoughts on India's regulations that allow for digital financial services and models to evolve. Are there some lessons you can share from outside India on this aspect?
Yeah, I mean, I think in many ways India has been a leader. When India's taken a somewhat more conservative approach with the payment bank regulations, whereas other countries sort of let things open for fintechs to come in and provide a variety of payment and other financial services. But that said, India has really taken a proactive step in opening up. And I think the infrastructure and the technology has really taken a lead. I think the way that, for example, payments are done in India, the UPI system to allow non-banks to initiate payments and so forth has enabled a level of innovation that we haven't seen in much of the rest of the world, north and south. Where there are areas, I think one of the biggest challenges in serving poor and rural customers is getting the economics right, especially for distribution. So how can you get enough agents out in those areas to get cash to people and provide transaction services? And that's very difficult. I think, the RBI has taken the step to mandate, zero MDR and free transactions and so forth. That puts stress on the economics. Other countries have been more sort of taken a more free market approach to pricing, and have had much greater penetration of agents in rural areas and much deeper usage. So while India is one of the leaders in terms of the number of citizens that have accounts, the usage is lower than in other countries that have taken a bit more of a free market approach to pricing.
Yeah. So better utilization of existing infrastructure, that's a very important point. And I'm going to ask you to come in where, what I'm hearing many of you say is we've got the right ecosystem, we've got some of the digital infrastructure in place. The utilization therein leaves gaps. And the reality on the ground, and Shamika, your inputs on the whole issue of the migration we saw, was the MREGA employment in villages adequate to take care of that stress? Government's affordable rental housing scheme in urban to receive these migrants as they come back. So the reality on the ground, it's all very well having the digital infrastructure, but the reality on the ground and implementation and the hand we give those that suffer the most. And what could we have done to prevent this reverse migration and the pain therein?
So Nana, first let me start with the last question you posed. What more could we have done? In a hindsight, and this is a great learning, I think, for all economies. There's been tremendous trial and error in the face of this massive exogenous shock. But I think in terms of the migrant problem, I think a better center-state coordination or coordination across states on a hindsight might have softened the reverse migration back to the eastern part of the country. But having said that, we do know, again, from the data, if you look at the number of job cards issued, the NREGA job cards issued. States like Uttar Pradesh, Jharkhand, Bihar, they have had significant growth, double-digit growth in terms of the number of job cards issued, and that is naturally against the reverse migration of a lot of their population. The second is, I think a lot of the states are waking up to the fact that they also need to generate local jobs. So beyond just the security, there is an attempt, let's say states like UP, a phenomenon where they're trying to put together information on the labor segments. So what are the kinds of skills people possess? They're trying to put together that data at a district level so as to make employment exchanges of the nature where people can find local jobs beyond just state-supported ones. But I think this federal structure, we have seen this not just in the US and Brazil, but in India too, that large federal countries have had problems because at the end of the day, health is a state subject. And to a large extent, states are determining what should be the protocols, whether it is for testing and what is the local facilities available. And that has had a bearing also on the economic recovery and I think the social security sort of safety net that we've laid out.
So in terms of now those that are coming back to work, the government's affordable rent housing scheme is one of them. Thoughts in terms of an MREGA for urban are things that are at least being discussed in policy forums as to how it's actually implemented remains to be seen. Your thoughts on that, and then I'm going to ask Arvind to come in on this as well.
So, Nana, I do not support the idea of urban NREGA. And it is simply because at the end of the day, we are in the midst of something which is very unique in terms of, if you just look at the probability of such events happening, these are very unique, number one. Number two, we do recognize that urban informal workers have been the hardest hit if you look at the entire spectrum of labor market. Now, from that perspective, constituting an entire safety net around urban NREGA just makes it very difficult to sustain beyond a point in time. Secondly, it is likely to also have distortionary impact. So I think a better way to support this market segment would be just direct spending by the government in sectors where these jobs are there. For instance, large infrastructure projects or the real estate sector, which construction is one of the largest employers of this market segment. And we have seen that some of the policies that were announced, for instance, of construction workers, the data seems to suggest that people did receive the cash transfers. So I think there might be better direct ways of doing it rather than creating an entire infrastructure around urban, NREGA.
Okay, thanks. And Arvind?
So I think the issue of center-state coordination, which Shamika has raised, is very critical to this discussion. My take on that is that I think there wasn't enough conversation going between the center and the state in terms of how to deal with the pandemic and then how to deal with the fallout of different decisions that were being taken. In fact, I think the entire effort was so centralized that even whether a barber shop will be opened or not actually was coming from Home Ministry and Government of India. Those instructions were coming from there for the whole country. And I think that is where one of the major problems that the Government of India took upon itself to actually deal under the National Disaster Management Act. They took upon themselves the powers to deal with the pandemic throughout the country, taking away those powers from the state governments. And in my opinion, it would have been much better managed if there were broad guidelines that the Government of India put in, but left every state to deal with the situation as it arose, which was nearer to the ground. There was much greater understanding of the reality. We missed out on that. In fact, almost for 3-4 months, Government of India was continuously sending out. I mean, if someday somebody should actually do a research on the number of instructions that were issued on daily basis by the Home Ministry in Government of India on very small little micro detail to the state governments. You could come out with maybe 1,000 or 2,000 page book with a great analysis of those. So I think that was one big problem, and that is the reason why we also saw the kind of migration that took place, because people just got holed in, and they had no way, they had no sustenance, they had no way to find any money that could reach. And in urban areas, unlike in the rural areas, in urban areas, the distribution of food in terms of wheat and other things was also uneven. In some places, it was done very well, but in other places, they just didn't have the database. They didn't even know. A lot of people were, for instance, sleeping under flyovers. And so there was no way to identify how to reach them, how to account for it. There was a big mess on that count. So I think we need to have two things in place. One, under the National Disaster Management Act, there should be clear delineation of the roles of the central government and the state governments, and they should be this should be cast in stone, so that there is no way that the central government begins to get into the space which is there for the state governments. And the second thing is we need to have SOPs. I've seen in many of the countries, especially in the advanced economies, they had, they have these categories, category 1 response, category 2 response, and they write down the SOPs on that. If your numbers are in this manner seen, the data collection is on real-time basis. And now with so much of, we are kind of so elated about the technological reach, I'm sure the data also can be collected in that manner. I think we need to have SOPs where certain actions get triggered on their own, so the local authorities, local officials don't have to keep looking up for instructions or telling the government, please change this so that we are able to deal with this, and then the state government writes to Government of India. All this takes a long while. If you have SOPs, we used to have. I mean, it is interesting to note. You'll be surprised with all this telecom reach you're talking of. Way back in 1983, I was district magistrate in a district called Bundi, which did not have a direct dialing system. You have to pick up the telephone and the operator will ask you number, please, and then you gave the number. I'm talking of 83, 85 period. So it's not sometime in 1942. And the lines were most of the time they were broken. So the only way you could communicate with the state was through the police wireless system, which was not very efficient. So the district magistrates had famine code, which had written down everything what the district magistrate had to do. We had flood codes. So if the flood came, what you need to do. In terms of fire, what was the response that had to be done? These were all written down. These were books. They were not electronically given. There was no internet. But this was available to the district magistrate. If he was cut off from everybody else, the district magistrate could still manage to feed the people in his district and save lives in his district and take care of their welfare in the district, being cut off from everyone else in the whole world because they were all written down. Yeah. Over a period of time, these have got diluted and more powers have gone up towards the state and then from the state to the center. And therefore, sitting in Home Ministry in Delhi in the North Block, I believe some undersecretary or director decides what will be the action that a person sitting in the district in Chhattisgarh is going to take in terms of opening a barber shop or not. Now, I think this is dysfunctional. This is really broken, and we need to fix this for dealing with any future contingency of this nature.
I think you raised the important point of empowerment down at the grassroots. It is important because digital connectivity can suffer. I have seen it happen when I was running the bank over floods in Bombay. We lost total contact with every branch because the mobile systems which were driving the internet at the time went down. And you had to rely on the SOPs each branch manager had and just common good sense to run that crisis at the ground. So digital, yes, is a solution. It will provide for centralization, but so much centralization that takes away empowerment at the grassroots is an important lesson that we should not lose, as you have highlighted, Arvind. So thank you for that. And Vedya, I mean, from you, let's stay on this theme of digital, the pluses, the minuses, and what are the lessons for us for the future on digital inclusion, the minuses as much as the pluses.
See, just before the registration, just to set the context to the previous comment. See, the one thing that is there happening in the entire ecosystem, even pre-digital and post-digital, is that generally, I have been in banking now and done small ticket lending for small entrepreneurs and consumers, etc., for like over 25 years now. I have always found that small entrepreneurs, small consumers are always more honest. Their intent to pay is far superior. They don't have the cover of a limited liability protection available to them. So if they default, their personal credit bureau record gets spoiled. They don't have an army of lawyers, smart lawyers, and smart chartered accountants who can represent for them in some smart ways and all that. So therefore, this realization, what I'm saying, at least I've had for a long time, I think this is now permeating an entire banking system as a whole. And therefore, you will see almost all banks, financial institutions, small finance banks, MFIs, all wanting to do this business. Regulator wants to support it, government wants to support it, banks want to do it. So therefore, because everybody focuses in the same direction, it's like a laser focus at the below the pyramid. I think this is a huge implication for India if you look forward 3, 4, 5 years, 10 years, because that area which is not getting finance will get credit now. That is my key takeaway. Now, digitization, what it has done to this whole picture that I painted, it has dramatically accelerated it. And we all know that, because actually, it's not a new point that I'm making, but we all know that suddenly, what could not be done earlier by income tax return based lending can now be done through cash flow. We all know that. So digitization has fast forwarded it. But the more important thing is that there is a concerted effort in this direction, and both for commercial reasons as well as for social reasons.
And comments from you, Michael, from you, Soumya, on some of these spaces, the discussion that you're hearing on digital and implementation therein?
Yeah, I would like to just make one additional, I think, couple of points which Mr. Vaidyanathan made. And again, I will just cite a data to show how much was the extent of digital in the crisis. I think a number which is in front of me shows that there was a rise of 96% and 27% in volume and value respectively in Aadhaar-enabled payment system at Kirana outlets across the country during the lockdown. So I think that speaks volumes about that infrastructure which we have been assiduously building. Now, the other important thing I would like to talk about the infrastructure is that, and I think this was one of the points which was mentioned by one of the, I think, Mr. Mayram in the course of the discussion, that we did not have a database of the migrant laborers. So I think that is one database which the government is saying it is putting up on one migrant database. And I think that will be very important to develop a credit history at the bottom of the pyramid. In this context also, I think the government has come out with a scheme of Shawnedi scheme for the street vendors, even though the amount is very poor. That will again create an borrower history at the bottom of the pyramid. And I think all this will enable a faster inclusion of these socially underprivileged people at the bottom of the pyramid into the formal sector. We also need to do it for the rural sector. As you know that in the rural sector, there is also a significant amount of landless laborers. So we have to find out ways to see how they can be integrated in the system. MSME system, another digital initiative which I just missed out is that I think that has been the bane of the MSME problem in India, is that these pending payments. I think these MSMEs often don't get pending payments from the industry, but I'll be happy to say that in the last, there has been now a portal which shows that what is the amount of MSME outstanding by every governmental department agency. That shows that the 21,000 crores has been paid to the MSME since May 2020 by all the central government agencies and central public sector undertakings. So I think digital has a role to play. Yes, we need to travel a distance, but at least we have put the basic infrastructure, and hopefully in the next 2 to 3 years, as the GST system gets streamlined even further, and we are able to hit a consistent rate of say 1 lakh crore or more than collection every year after plugging the loopholes, I think it will be better for everybody to get formalized into the credit delivery mechanism. And I think that in alone could solve a large part of the problems in the financial sector.
Yeah. I think the point you make on digital not just being a way to deliver finance, but also the transparency it brings, like the delayed payment issues, that you can demonstrate and show what is working and what isn't right up front for the players to be pushed to do the right thing, is, I think, a very important area. And actually, digital also plays a role in communication. I think Shamika rightly mentioned that the fear of the pandemic was as big an issue as the actual delivery part of our discussion.
So, lending to small and micro enterprises is a top priority of governments around the world, and no one's really cracked it. I think, as was mentioned before, everyone recognizes that the potential is huge. The economic benefits are very clear if it can be solved, and a digital should enable new models to be developed. But we really haven't seen that reach any kind of scale to date. One positive area, historically microfinance to the very poor, the evidence in terms of the welfare benefits of those microfinance loans was quite mixed. We're starting to see evidence now of MFIs that have moved to a digital platform, therefore brought costs down and brought other efficiencies, increased the repayment rates, and so forth. That the welfare payments, the welfare benefits are much stronger. So there was a pretty strong study done in Uganda on that point. But I think digitizing the microfinance sector is an opportunity. But clearly, if we can crack the nut on reaching micro and small enterprises, a huge benefit, but it's a big challenge.
Yeah, I'm really glad you brought this issue of cost effectiveness and the ability of digital to do this. In fact, Mr. Chintala of NABARD in the inaugural raised this issue, really talking about how the costs really need to be to the individuals to come down from the sort of 26 even % down to 18. And it would be possible through the technologies that are put both at the end of the demand side, which is the BCs or the individuals, the foot soldiers, and the way they can work, but equally on the back office and the technologies therein in terms of cost effectiveness at the MFI level. And I think this would be a huge area of focus, which I hope can be driven. And Vedya, if I can ask you to come in here, because you support MFIs as much as you actually work in the space. Do you think that digital could be used more effectively at the MFI level to bring down costs?
In a big way, actually. In a big way, because when MFI started, it was basically people would come and sit under a college or a school or a banyan tree and collect money from people who lend to, and often disbursal was in cash, collection back was in cash. Now disbursal often has gone into bank account, not often, almost every time. Now collection can also come through the route through some effort. As of today, collection is still in cash. Enough just for information, but that can come through the routed system. Effort can be done there, and that will be a big breakthrough whenever that is achieved, and UPI can make that happen. The other thing that is happening is that the big thing that has not reached the poor, as of today, bank accounts have opened, as all of us know, 330 million Jan Dhan accounts have come, but not enough. Let me say, some work has happened, but not enough work has happened in being able to insure them through sachet insurance, give them small ability to invest in mutual funds for 10, 20, 30 rupees, 100 rupees a month, sachet mutual funds, sachet insurance. All that has not happened yet in a big way. I have met just so many of them. And by the way, let me just tell you that I asked a group of about 30 group women borrowers like this, saying that how many of you have insurance, and close to about 25 of them put on their hands. And I asked them, where do you have it from? And almost everyone said LIC. So let me just say that that the insurance has reached, but not through the digital way. So the point I'm saying, therefore, is that the other financial services through the medium of digital can reach them. That's a very big social ground for us to cover.
Yeah, and I think insurance clearly plays a role. We know that whether it's the farmer or any of the constituents that you've described, it could play a very key role.
Yes.
Radhika, I wondered if we could move to questions. Are there some questions that have been posed to the panel? Because I would then like the panel to comment on their recommendations for policy of long-term recovery, but I thought we could just take some questions before we move to that.
Yes, hi. We've actually posted questions on your chat, Naina. If you will look at your chat window.
Yeah. Okay. Radhika, if you can just read those out, even as I read out one or two while you're at it.
Okay, just a moment. Send them to me.
Okay. So I have here.
Nana ma'am, you have your back camera on.
Sorry? Yeah. Right. Okay. Yeah. Yeah. So let me just coming to the chats. I saw that there was one for Vedi there. Do you think banks like IDFC First would consider its BC network not only for payments business but also for the nano micro loans? So this is a question from Amit Arora of World Bank, Vedya.
Oh, thank you for that question. Yes, indeed. I think it's a very big opportunity. I think because all the BC points are also technologically connected through UPI and AEPS and all that. So definitely a big opportunity, and we'll look at that.
And I think, that what has not happened on scale yet, do you see upscale of digital model in rural India?
Yes, it has to be. Our experience right now is that like I said, when you're doing small ticket financing in the rural areas, it is the credit evaluation, let me be honest, for all the coverage on digitization that has happened in rural areas. When you're evaluating a small entrepreneur for 1 or 2 lakh rupee loan for setting up a shop, etc., there is still a credit manager. There's a salesperson who goes and meets the customer. There's a credit manager who meets the customer and comes back. Let me say that is still, 80-90% of the way of credit is done. Yes, once that starts going through digital models, through the cash flow evaluation and bank balances and all that stuff, that will result in a huge increase in credit in the rural markets. So let me say it's largely physical today. It's still reaching the bank account to credit and it's all electronic, but credit evaluation is still physical, not just for us, for state-owned banks, for us, for many other banks. I think there's some gap we can cover there.
Do any of the other panelists want to comment on any of these issues? If not, then I have a question here which is addressed to the panel in general. And maybe, Michael, if you could come in on this. It has been found that countries that set up emergency funds were able to respond better. So if not having Nriga in urban areas may be okay, but to have an emergency fund to beat such crisis may be an option. What do you think? This is from Hema Bansal, who's an independent consultant. Michael, thoughts from you, and then other panelists if they want to chip in.
Yeah, I think there's a variety of things that governments can put in place for a rapid response to these crises. Not only having a fund in place, I think the biggest challenge was a data challenge. So having a strong social registry and also the ability to tie together databases from different sources to get pictures of who's missing. I think it was mentioned earlier by one of the panelists, people sleeping under bridges that sort of fell through the cracks. So I think governments can really build a stronger database of citizens, draw upon multiple sources, tax records, other payment records, to identify who are potential recipients in times of crisis. That can be a huge advantage.
Yeah. So thanks, Michael. Anyone else? Well, if not, let me now just, because we will lose two of our panelists shortly, Arvind and Soumya need to drop off. So I'm going to start by asking Arvind to come in, and we'll go back to questions after we've got these comments from the full panel on your recommendations for policy of long-term recovery. So Arvind, after that, Soumya, and then we'll take the comments from the rest of the panel. And if we have time, go back to other questions. So over to you, Arvind. Your recommendations for policy of long-term recovery.
So the first thing I think, which is most critical, we have tried to do something. I mean, I wouldn't say it's the most elegant response, but something that we have tried to do in Rajasthan. One thing which I have seen in terms of the government's intervention in economic activity, I think that needs to come down a bit, because the transaction cost of doing business or putting back quickly businesses or responding at a private sector level to crisis has diminished over a period of time because of very great inroad by the state. And this is all even in terms of the regulations, for instance. I think we are over-regulated. Every day we see new regulations coming in. I've been tracking SEBI regulations, for instance, and I think it strangulates the economy for making, the markets with the intention, with the good intention of protecting everyone from every kind of a shock in the capital market. So there are a lot of these things which have happened. In Rajasthan, we brought in an MSME Facilitation Act last year, which said that for the first 3 years of its operation, the MSMEs in Rajasthan do not need any prior approval or NOC or any kind of letter of comfort, etc. from the government. All they need to do is to register on a portal, and they get an automatic registration certificate. And we have said that even for the purposes of the bankers and others for providing loans and so on, this should be treated as something which says that for 3 years they have all the approvals to go ahead and do business, which means that for the first 3 years for MSMEs, for startups, they do not need to deal with any government office, which completely takes away a huge amount of time and money in terms of the transaction cost to the to the MSMEs in the state. The state government wrote to the chief minister wrote to the prime minister that under central laws also similar kind of dispensation should be given. Unfortunately, that hasn't happened yet. But if it happens, then I think that in itself is going to create a tremendous facility for those who want to start entrepreneurship and they want to test their luck with doing business. Obviously, we believe that if 100 people register, maybe only 15 people will succeed, but then that's fine. That is how it is. It is supposed to be in a business scenario. People test out and then they fail and then they get out and then they come back again. But we need to create that kind of a ecosystem for starting businesses where they can come in. I think this is also necessary for large industries. I think every law has to be revisited to see whether the requirements of compliances in those are really necessary, especially now that we have been talking of technology in such a way. Are they really necessary, or self-certification or third-party certification should be acceptable? So we need to get government out of the system, predictability of policies, predictability of taxation regimes, and also the very clear guidelines as to what will work and what will not work is the need of the day. I think this, as far as businesses are concerned, I think this will be the single one-point agenda that we must put in place going forward for a long-term recovery of the Indian economy. This is my view of this.
Yeah. Well, Arvind, thank you. It's always good to hear an erstwhile administrator and someone who has been as senior in the finance ministry opine on issues such as this. Lighter touch from regulation is really what you're urging. And I think these are some of the areas which we do need to look at addressing going forward. Soumya, over to you.
See, in terms of the measures, long-term measures, I think we'd like to need. I think the first thing we need to know is that I think we need to look into this farm sector liberalization policies right now in right earnest, and we need to roll these out further and to see that in common consensus reached. I think price discovery in the rural sector has been an issue for a several long time. Even as we speak today, there are issues in the price, and if you actually look into the market prices and the MSP and the market prices, there is a significant gap. So we need to sort these out once and for all, because I think that is one of the primary issues inflicting the agricultural sector, I think, for the last several years. The second thing I need to know is that I think, as you know, the government has a limited fiscal constraint, so it needs to spend this money wisely. All of us knows that there could be the fiscal numbers this year could look a bit odd. Next 2 to 3 years also it could still look odd, but it should actually put in public domain the plans of his expenditure plans, and there has to be a clear plan of relaying the priorities of restructuring the national investment pipeline. Because if you look into the shares of the private sector, the public sector, and other sectors which were there before the pandemic, I think all these numbers should change right now. And the share of the private sector needs to rise over here. So we need to look into we need to push the infrastructure sector, and we need to restructure the NIP so that an effective increased participation of the private sector is done. That needs to be done in quick earnest. The GST rates are over there, as I think the taxation measures is to be simplified further. We are in the process and we need to do that. And because that will actually increase a lot of enabling the atmosphere for the business. And finally, I think all these are discussed in every year's budget. We need to do to increase the enhance and the savings and the productivity measures, which is basically a continuous process. So I agree with the fact, Mr. Mayaram, that the government needs to get out of the business in most of the areas. And another important thing, which again could be a very politically sensitive issue, is that if that is the case that the government needs to get out, why not try to see whether that could be done in the financial sector, at least for the public sector banks, and even for some of the judicial reforms and administrative reforms, by merging, say, some of the ministries in the government department. So you can always make a beginning at your backyard, but these are some of the things which could be done so as to improve India's long-term growth potential.
I think, broad-ranging comments from you there. There are a couple of questions before we lose you, because I know you have to drop off a little earlier than the rest. So let me just ask you to address one of the questions that has come in the chat box, which is, how do you, and this was addressed really to State Bank of India, is how do you hedge your risks when you respond to risks emanated from pandemic of such scale?
No, I think, one data point which I'd like to highlight over here, I think, as you know, that there has been an issue in the asset quality of course, the public sector banks in the last, I think, couple of years, specifically after 2014 when the AQR exercise was unveiled. But as the largest banker in the country, I think the risk management departments and all these departments have got significantly streamlined after that. And I am sure, and if you actually look into the data of the amount of, as all of you know, before the pandemic came, there was a significant amount of comments which has reached an amount that could be an explosion in the restructuring potential of the banks. But as I speak today, the amount of restructuring requests which have come to our bank is actually significantly on the lower side. So this, I think, in part, I would ascribe to the efforts which the banks have made, the RBI has made in terms of putting in a discipline, corporate discipline, convincing them that if you pay on time, your ratings will be, your ratings will not be discouraged. You will get a good rating, you will get a good pricing. I think that is working. So my sense is that an efforts of streamlining and risk-based pricing mechanism, which is a continuous process. And of course, that has been aided by the insolvency and the bankruptcy framework, whereby we can see that we are able to now get a large pack of the money which was due earlier. I think recently there has been a resolution of one of the cases which was long pending. So I think all this framework, the framework has been put in place so that which actually looks more towards corporate discipline in terms of the payback. And that is one of the things which has been driving, and that actually answers the question that why that gives us confidence that we have seen the what's behind us.
And there's another question which I will ask Vedya to come in after you, which is to do with insurance penetration. This is from Uday Kumar Heber of Credit Access Grameen, which is what is the opportunity given the whole digital penetration to increase insurance penetration, given that the microfinance books are pretty strong. What are your strategies to deepen insurance penetration? And I think, Soumya, after you're done with this, we'll turn to Vedi to also come in on this one.
Yeah, I'll actually answer this question, and with all of your kind permission, I'll push off because I have another meeting to go. But in terms of the insurance penetration, I think the pandemic may not have come as a good time for the insurance sector, because as we are speaking today, I think there has been a renewed demand in the insurance products. If you look into the data, the demand for health insurance products today is got all-time highs. There has been also a significant increase in this life insurance product also. So perhaps the insurance sector has benefited from the pandemic in terms of people becoming more conscious. I think this is one of also the structural changes with the insurance sector is witnessing. If all of you remember, in 2010, the IRDA had actually instructed the insurance companies to move more towards traditional products rather from the ULIP products. And again in 2020, perhaps because of the pandemic, there could be a change in the insurance sector, and that in itself will increase the penetration. And there are several strategies which we have been trying to work out. I think maybe our life insurance partner will be in a better position to say that, but I can say that digital is of course one of the initiatives which are looking into so as to increase the penetration. But as of now, the outlook of the sector looks better, perhaps because of the consciousness which has dwelt on the people so as to become more health conscious, and maybe more even the conscious towards traditional insurance products, which as a result of all these things which have happened to the people in the last 7-8 months.
Yes, prevention is always better than cure. So
Yes.
Thank you for that, Soumya.
Thank you.
And Vedya, over to you.
Thank you, and I will take a leave. With
Yes,
all your
I know.
permission.
I know you have to leave, but thank you for your participation. Really enjoyed your comments. Vedya.
Thank you.
Yeah, to the question of the previous speaker. Now, we all know that historically insurance has been a difficult fortress to breach, because the operating cost of reaching and selling people insurance has always been very high through agents and all that. So it's generally been more expensive way of reaching, and huge commissions paid because of operating cost and all that. But actually, in the last few years, we work with close to 6 or 7 insurance partners. We distribute the product both life side, general side, and so on. We are finding that most of them are doing massive digitization. The same capabilities that banking system now talks about in terms of video KYC and using other technological means, insurance companies are adopting the same things, and therefore their ability to create sachet products has dramatically improved. Now that is across the board. Now their ability to create sachet products, banks' ability to create sachet products, patch the two together and deliver it to the end consumer has, has dramatically increased. So therefore, on this concept, we are seeing a huge increase in insurance, sales by us, or insurance solutions or sales that we give to customers. We've seen a big ramp up. I mean, let me say that this year vis-a-vis last year, and what next year vis-a-vis this year will be, we will see it increasing more, not because of any other reason. That's because the ability to reach the last mile has improved.
And so we have the last 3 minutes, and 3 of you to share your comments on policy for long-term recovery. So where there are your quick comments on that, and then we'll go to Shamika and Michael in that order. Okay, since this will be my last comment, because after me, other speakers would speak. My quick comment would be as follows. Many speakers before me has talked of many ways of how small entrepreneur can be improved. My sense also is that for some reason, let me say 70, 80 years, not a new reason, small entrepreneurs didn't get credit. And when you call leverage, it's actually lever, right? If you see the English word of the same thing. And they never had the lever. And therefore, they never grew. And the large entrepreneurs always had credit and so on.
So therefore, my quick comment is that apart from providing credit, which should come, this other big piece which I've been requesting, let me say, policymakers whenever I could get an opportunity, I've done it at multiple forums, including at highest levels, is to say that small entrepreneurs' tax rates should be much lesser. We all pay 25% as large corporates making thousands of crores. Small entrepreneurs pay 25. It's, to me, just not. By the way, LLPs and partnerships pay even 35% today. To me, it's just not justified. They should pay 0% tax, in my opinion, zero up to a certain amount of income, say 5 or 10 lakhs of income, they should pay zero. Then there'll be no incentive for them to give in cash, because they're going to pay no tax. Why will I show it in cash? So they should all be brought to the banking net, so to say, not banking net. Let me say the out of parallel economy. So 0% tax, and then ask them to pay 5% tax or 10% tax, and that's all they should pay in a progressive manner. And then the large corporates can pay 25. I think this will be a huge boost. They will all come to white economy. India will change, in my opinion, with that. And at least they'll get a shoulder.
Yeah, it's an interesting thought. And of course, they put their money to work back into enterprise and entrepreneurship, which has its own accelerator effect.
Yeah, and
so
they
it's
don't
a good suggestion.
Yeah, thank you. And they've got to fight the big folks. How to fight? They can't fight the fact interest rate is 20%, 18%, because that's market economy. But at least, if they pay 0% tax, they'll all come here to the white economy, 0 or 5%, something.
Yeah. So thank you. Thanks, Vaidya, for that. Very important points. And Shamika?
So for the long-term recovery policy, Nana, my sense is so far the government response has been, I'd say, frugal and pragmatic. But at the same time, we also have to see that the nature of the infection, if you just look at the magnitude of the COVID infection and the kind of mortality rate that we have had, if you compare it with most other major economies, then we really are not in as bad a condition as, let's say, the OECD country. And yet the economic slowdown has been very significant. So these two things, there is the dissonance there, that while the infection hasn't been that bad, our economic slowdown has been more than, frankly, what it ought to have. And I think this is where government's managing of expectations becomes very critical. And I think, having a plan, talking about that plan in terms of the 50 major infrastructure push that we decided, and it was announced last month. I think, a time-bound plan, what kind of outstanding payments will be cleared by when. Communicating a lot of these things is a good way to manage expectations in a market we are in, which is high uncertainty. But at the same time, we know that unlike a lot of these economy, a lot of cash transfers or spending to boost demand has not worked. Because faced with this kind of uncertainty, only precautionary savings have gone up in most places and in India. So, boosting demand through government spending of this UBI or cash transfer was in any case not a good idea. But spending on infrastructure, I think, in a big way is long overdue. I really think the economic pickup and almost all the high frequency data seems to suggest that we are picking up rather well. But there is always an opportunity cost of not picking up fast enough, especially when mortality is low and infection is really coming down drastically. So I think the other big long-term investment has to be healthcare. I think one of the reasons why we are caught in this bind, where we don't know what to do, is because we don't know how bad this infection will be. But I think that is also a function of the fact that our public health infrastructure itself is very sparse in many parts of the country. And it is frankly on the back of this rather poor public health infrastructure that our response to the pandemic has also been muted. So serious investment in public health, I think, is long overdue. And while we are seeing Ayushman Bharat, 40% of the population is covered, but that really needs to be now scaled up. It has to cover every part of the market and sort of defragmenting even the government health insurance. You have CGHS for the, the grade A, and then you have state, insurance plans. It's a very fragmented public health insurance platform as well. And I think they really need to be defragmented for even health insurance to become a sustainable policy.
Shamika raised the issue of health, and it is such an important and big part of it's almost the more impoverished you are, the higher the percentage of money that ends up getting spent on health of the family, it is clearly an area which we need addressing, particularly at the bottom of the pyramid. Michael, over to you.
Yeah, I think if you really want to drive deep and meaningful financial inclusion that'll drive economic growth and bring people out of poverty, you need to solve two problems. So one is the value proposition. You need a compelling value proposition for the bottom of the pyramid, micro enterprises, the agriculture sector, smallholder farmers. And I think there are new models that need to be explored, bringing together financial service providers with supply chain and distribution chain relationships that really know these potential borrowers. You can bring together lending and insurance together to mitigate and distribute the risk. So I think the value proposition is one big piece. But risk management is another big piece. As these new consumers start to use a wider range of financial products and use them more frequently, maintaining their trust and maintaining security in the system is going to be really important. And I worry that not enough has been done to protect those consumers at the scale that they're coming into the system. So using technology for monitoring risks, for grievance redressal, easy ways for people to report when something's gone wrong, I think is going to be critical, because I think there is a risk that if we don't put those in place, there could be a backlash if people lose trust in these new financial systems.
So I think, Michael, the points you make in terms of, the value propositions, and I hope that there are models that you and BMGF can continue to share with us from around the world that help us to keep developing our own policies and indeed implementation on the ground. We're totally out of time, so I'm not going to even attempt a summary of what is a wide-ranging and brilliant discussion. I could not have hoped for a more well-informed panel, people with experience on the ground, strong research, and I hope that everyone has enjoyed this discussion as much as I have. So thank you, and over to you, Radhika.
Naina, the score is India needs some 80-odd runs to win the match, and Australia needs 6 wickets to win. Let me just say that India's at Gaba, at Brisbane, India's probably closing in at victory.
Yeah, well, it's always good to end with good news. Yeah, fingers crossed. Yeah.
Well, thank you, everyone. Amazing, I think, first plenary, very comprehensive. As Nana said, it's very difficult to actually attempt a summary, but we touched upon, I think the panel touched upon almost all facets of the broad financial inclusion landscape. And thank you so much, Nana, for your wonderfully balanced and, comprehensive coverage of all the issues. Wonderful moderation. Thank you so much. And thank you all for joining us today and helping us bring together the first session of the two-day summit. Thank you.
Yeah, thanks, Radhika. Good luck.
COVID-19 began as a medical emergency.